Hi guys, this is Sushmita, your crypto guide, and today I'll be talking about Bollinger Bands. The Bollinger Bands or BB were developed in 1980s by financial analyst and trader John Bollinger. Since then, many traders and chartists have been using the BB as a technical analysis indicator. In a sense, the Bollinger Bands function as a measurement tool of market oscillations. As such, the Bollinger Band indicator can be used to identify the moments that a particular market presents high or low volatility. Also, they can be useful for spotting potential overbought or oversold market conditions. The BB indicator consists of two side-along bands and a middle line. These three elements indicate how prices move around an average value, which is represented by the middle band. The upper and lower bands expand when market volatility is high and contract when market volatility is low. If the price of an asset moves from below the middle line all the way up to the upper band, it is an overbought condition. If an asset's price exceeds the lower band, it may be indicative of oversold conditions. The upper and lower bands may also suggest potential support and resistance levels in which the price is likely to bounce. The Bollinger Bands are among the most used technical analysis indicators, especially in traditional financial markets. However, they are also used by cryptocurrency traders. These should not be used as a standalone tool, but rather with other technical analysis tools and indicators to decrease the overall risk. And this was all about Bollinger Bands. To know more about such technical terms, do write in our comment section below and do not forget to subscribe to our channel.